The reality is that the majority of Americans have amassed the bulk of their wealth into workplace retirement plans, things like 401ks, 403bs, TSPs, 457s, or IRAs, a combination of both. Often, as we've talked about, a lot of people have multiple accounts. Right. And so before the break, we talked about the problem that this is presenting for people because it increases your future tax bill in retirement. What are some possible solutions that folks can utilize to navigate this?
Well, one of the big ones is the ability to do a conversion from your traditional accounts to Roth accounts. Mm-hmm. And what I love to do with people when they come in to see us, we can take a look at the tax bracket you're in currently, mm-hmm. And how much more income can you take in that current tax bracket without pushing you into the next one. And the reason we do that, if we have cash on the side, for example, mm-hmm. Is we can go ahead and begin to convert some of those traditional dollars into Roth dollars from forever taxed into never again taxed, mm-hmm. and use money that we have in our cash accounts to pay those taxes. Mm-hmm. That's an absolutely brilliant strategy, depending on what age and what your income is. Mm-hmm. There are certain people that's not going to be a good idea for, mm-hmm. But as long as you're doing the math, you're running it through our illustration software, and we're able to look at if we convert that money from traditional to Roth, mm-hmm. of course we're going to pay a little bit more taxes now, but we'll pay less for the rest of our lives.
Right.
And so depending on where we are in our lives, in our 40s, 50s, mm-hmm. 60s, the answer could be one or the other. Mm-hmm. But that's why it's important to sit down with someone and find out the exact answer for you.